Hello, this is 13 with another Silk Trades video. Today we're going to be looking at a strategy I like to call OTM long-term call. This is a strategy used for oversold regions on ETFs. You don't want to be using this strategy for normal stocks, so I'm talking about like AAA companies or Amazon, Activision, Microsoft. You want to use these for SPY, QQQ, DIA. This is going to be a pretty straightforward strategy. It doesn't come around that often, but I believe it's important to know about this strategy so when it does come around, you know how to utilize it and you know how to capitalize on those gains. Because these gains are pretty low risk in my opinion, as long as you know what you're doing. And they also help set a specific path for you that you can follow. So when I say that, I mean, especially for SPY in the contract I'm in, I could have scalped it today. I could hold it for a couple weeks, which is what I plan to do. Or you could even hold it until your expiry and hope that it gets pretty close to that and still make about 40-50% profit. So let's get straight into it. And as I always say, this strategy does come with risk, so don't think it doesn't. It's just the least risky investment that I know of personally. So when I say this doesn't come around often, I really mean it doesn't come around that often. So as you can see on the SPY chart right here, there's a couple of indicators I like to use, RSI being one of them for this strategy. So when I look at SPY, I want to make sure that the RSI is oversold, so that'll be under 30. So 28, 28, all of these right here, this is where I'd enter into that long-term expiry. So let's just look at the contract I'm in. So while we're looking at the example, we can go over it on real life charts. Okay, so this is a contract I got into. It's a 288 call for SPY. Expiry is December 21st. My average cost was 82 cents. I got it in this morning once I saw that the RSI was pretty oversold. Right now I'm at a profit of $336 or 15%. I hope to at least make 50% on this. I would assume I could. The highest it was at was $1. So I could have made, I was up $500. I still didn't sell. So I'm pretty confident on this play. This was made on October 25th. So, you know, hopefully this video ages well. Looking into it, now that we know what contract we got into, let's figure out why I got into those contracts. So the first thing we want to look at is the RSI. It is oversold. It does meet my standards. I got it straight in the morning, so I got it at around 26, 27. So I basically got at the low, so I set myself up to be successful for sure. Looking at the 1 minute chart, it's not really that important, but it is a good indicator to see where you're at. In the morning, it was right at the lower Bollinger Band. If you want a video on Bollinger Bands, I can make that later. It's pretty straightforward though. If it's at the low band, it basically means it's oversold. This is usually when someone would buy. If it hits the red band up here, this is usually when you sell, etc., etc. It's pretty straightforward. So let's get straight into the contract. So I got out in December 21st and I got 288. So first thing first, why do you not want to get this in a different company? Well, ETFs are always going to be widely traded by a lot of people. You're going to be very keen on making sure you have a lot of open interest. If you look into other out-of-the-money contracts, the open interest will be less than 5,000 most of the time, and you really don't want to be under that pressure. You want to have at least 10K open interest on these, just so you know that if things go wrong, you can get out of that position very quickly. That's just my personal preference. Let's look for an example just so you guys know what I'm talking about. Let's look at Microsoft. If we look at Microsoft, I don't even know if this would have it. So if we got an out of the money by like 140, right? 300 open interest. You know, this is the closest thing you're going to get is 3K open interest. And it has a 5-cent spread. For buying it at the bid at 9 cents and being subjected to only being able to sell it or buy it at a 5-cent spread is pretty dangerous, considering that's a 40% difference. You really don't want to get into a trade like that where if something bad happens, you're at the mercy of whoever the ask is or whatever the bid is. You want to make sure you have some control in your plays. So that's why I always recommend ETFs. So looking back into this ETF, 288, a lot of open interest, right? Lot of open interest. I was going to get the 290, but I wanted to get something realistic. So 290 is all-time high. Within 2 months, I don't think it could break that. But 288 is plausible, and it's also a lot more safer in my opinion. Probability is 11%. I definitely didn't want to get something that is in the 1-digit percent of profitability. Not a big key indication, but it's something to definitely look at. So now that we got that in mind, let's look back at that contract. So in that little bit of time I was explaining that, I made like 60-70 bucks. This is basically going to be a play that you can make as a scalp trade, right? So let's say I wanted to sell it right now. You know, I just made 450 bucks and I made that in like 20 minutes, right? So that would be an easy scalp play. Obviously, I'm not selling it for a reason. I think that it still has room to go. So I'm probably looking to swing this for 1-2 weeks. That's another reason why I really love this strategy. You can scalp it for the day. You could swing it for a couple weeks. You could even hold it for a month and you'd still expect to be profitable with this play. It doesn't come around often. I really stress the fact that you want to make sure that it's oversold on the daily chart. Usually when it's oversold on the daily chart, I did this play actually right here at this buy signal I got this this little buy signal right here. I did this play and I made about I got a contract from here out to December and I made, I think it was like 450%. I don't have the contract anymore though, but that just kind of shows you how impactful it could be to you. Looking at SPY, I really do think it's pretty oversold. I think 270 is the area that it should be at, so we're going to be hoping to see that in the future. You know, as I said, that I made 56 bucks. So this is definitely a risky play in terms of OTM, because if SPY even goes the wrong way, you're definitely going to be down probably like 30%. But you know, if you believe in the US market, there really shouldn't be a reason for you not to buy an oversold ETF, honestly. So 99 cents, I bought at 82 cents. That's just basically how you do it. It's pretty straightforward. If you have any questions on it, feel free to ask me in chat. I'm always in chat. I always try and answer within 5 minutes. And then the trading group will be in the description below. So if you have never been in a trading group, you know, we just go over ideas. We don't really like make buy alerts, but we do go over strategies and what works best for us. This one being one of my favorites. You can probably do this with other companies within a certain reach. You could probably go out to January 2019 where there's more open interest, or you know, go out a year, there's more open interest. You'd probably only make about half what you'd make right here, so you'd probably make about 11.5%, which is still pretty good. Keep in mind the US standard of how much return you get per year, I think it's about 15%. You know, I just beat the market with this one contract. As long as you find those plays, you could easily beat the market and, you know, do this as a living. So if you have any questions, feel free to ask me. Leave a comment if, you know, there's anything you think that can be improved on the video. Make sure you subscribe for future videos. And have a great day. Thanks for watching.